Hi guys, welcome back to Marantz. Rantz, plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. So I want to talk about GameStop right now. I'm going to show you the chart. I'm going to show you everything you guys want to know as far as where it's headed, right? So the price right now bouncing between 35 and 27-ish, around that price range, but this is right where we want it to be on the daily charts. Now I'm going to show you charts, but the most important part about this whole chart and why it's going to go up to $50 a share, $100 a share, if you're paying attention, is going to be right here. As we look at this chart, we're going to understand this is the daily, and as we've been trending well within our rights, the 50-day moving average, you're going to be there, but now you see this. You see this weekly chart here, and I'm going to go ahead and move it around this way. This weekly chart, we're still within this triangle here. This triangle that you're in is a bullish pennant to the top. So it means that we're on the top side of this pennant. We're going to be pushing out of it. We're going to be pushing out of it real soon. And whether it's going to be right around earnings time for February, March coming out, you'll have the full fiscal year. And the full fiscal year is going to be the ignition switch for GameStop. And I'll show you why in a minute. But this is the monthly. Okay, don't ever let the monthly confuse you. When you guys are looking at this monthly chart, I drew this box up here, this red box, because GameStop is going to be trading in this box very soon. Now, it'll take you a year to get there, but from a year from now to then, this box goes all the way up to $1,800, right? $1,800 from $48. Now, I want to explain this to everyone out there that does TA. All you guys on YouTube that do TA and you guys are using these linear charts, you're completely wrong. Those are for short-term traders. Those are for a week or two, maybe even up to a month. But if you're looking at charts longer than a month, you have to use logarithmic charting. And I have another whole video on that, why you should. I made it like 4 years ago. Go watch it. But this is going to show you what's really happening with the stock and the company. I didn't just draw these triangles and then it worked out that way. You literally know where the support is, where the downside divergence comes from, and then where your capitulation starts, and you take off, okay? So as we take off to a zone that nobody knows about, as we're going to leave all of this behind, it's because of a couple of certain financial, what we call measurables, and we're going to look at them. So let's go ahead and click on it really quick. The first thing we're going to look at is this measurable here called total equity. And the total equity is your shareholder equity here at $4.8 billion. For everyone out there that reports on a quarterly report versus an annual report, see, some people only look at 10Ks, some people look at 10Qs just to catch trends, but the annual report's going to show you that GameStop has shareholder equity of $1.34 billion. We know that now they're sitting on almost $5 billion. What is shareholder equity? Shareholder equity is what your shares are worth, the actual value of the position itself. Shareholder equity of $4.8 billion versus the $1.3 that it was last year. But you're going to have even a bigger increase because of quarter four, Christmas, Black Friday, Cyber Monday, these pro weeks they've been doing. You've had a launch of Pokemon in November and January. You've had the partnership with PSA get announced, and it's full throttle, i.e. you can submit your cards to any GameStop, well, most GameStops in America. And then, of course, you can also buy PSA-graded cards 8, 9, and 10, similar to the Caitlin Clark I bought right here. And I have more cards that I've bought over the years, over this past year, but I gave them all away, right? I give away every card I have. But let's talk about GameStop and why it's going to explode beyond belief. Why? Because that shareholder equity, the actual current ratio, if you guys are not familiar with current ratio is the metric of measuring assets versus liabilities. How many times bigger are your assets than liabilities? And right now, GameStop's running at a 5.0. There's not a single retail company in the world that runs at a 5.0. They have 5 times the amount of assets versus liabilities. They're never going to go bankrupt. They're going to stay in business forever. The cash burn is zero. They actually make a profit operationally, and the cash itself is not burning. They're adding to it. After quarter four, you will see these numbers. All of these numbers will be placed upon you because what happens in Wall Street is they keep judging GameStop off of quarter one, quarter two, quarter three, and not quarter four. It's the whole year, not just a quarter. And the reason for that is because they're a seasonal company. It's seasonality. Retail is that. But here's the kicker. Here's the winner. While you're giving value to every other company, there's only 3 companies in the world in retail, and I don't want to say the world, I'll say the U.S. Only 3 companies in the U.S. retail with more cash than GameStop. Amazon, Walmart, and Costco. Then GameStop. Do you guys know how big that is? To have the $4.6 billion cash, to have shareholder equity of $4.8 billion, book value is a measurement that people don't want to give because they just hear book value, right? They go, oh, book value. Well, anyone can have book value. You could have assets, right? You could have anything you want. You could have goodwill. No, GameStop's just cash, and they didn't borrow any cash. They generated this cash via some offerings, and a lot of people frown upon that. A lot of people look down on it, and you can't, because if you had a product worth buying and you're selling it, then that's where you actually get your money from. I've seen people do offerings. I've seen companies do offerings. I'm not going to name them out loud because I don't want to embarrass them and their investors. But they do offerings and they can't finish off the offering. It takes them months. GameStop did 2 offerings and it took them 3 days and 4 days respectively for each of them. They literally sold billions of dollars worth of their company to investors that wanted to be invested. Now, I'm not speaking through windows here. I'm not trying to read between the lines. I'm not telling you about the tinfoil that's out there. I'm letting you know raw numbers for GameStop. They're going to show $100 million profit for the year, compared to $6.7 million last year. Because GameStop is sitting on a pile of cash, the interest is generating almost $50 million a quarter. So although it's only $100 million this year, that is still almost 20x of last year. So when you have a profit margin increase, gross profit margin increase, by the way, 500 basis points, but GameStop's increasing on every metric, every measurable for Wall Street. But the biggest increase to go from $1.3 billion to now $5 on shareholder equity, someone has to agree that that's a discount on the share price. Because there's not a single company in the mid caps and or headed towards the S&P 500 that shouldn't be given fair value for shareholder equity when you're debt-free, 0 corporate bonds, no covenants at all, and a covey-heavy environment where interest rates are up and to the right. They're sky high. Not for GameStop. GameStop has all the cash in the world. So when we talk about book value, guys, and everyone wants to give you value and say, this is what this company's worth, and you know what, it can't be worth more than that. Well, I'll tell you what. Best Buy trades at around 6 times book. Well, if GameStop was 6 times book, they'd be $66 and counting. If they were, I don't know. We don't want to do Nvidia and Apple and all of them that trade at nothing. They trade at like 70 times book, 80 times book. I'm okay. I'll say it a different way for all you guys out there that doubt this metric. When you come looking for GameStop and you understand the discount per share that you're getting, when $11 is cash and you're buying a share at $28 today, you're literally getting the shares for $17. The discount is $11. You're not going to lose a single dollar. You know why? Because the word book means something to accountants, but the word book should mean something to you a little different. The word book should mean, what is this book? What am I reading? Because every company has book value. Disney has book value, $100 billion worth of book value. It's all assets and goodwill. It's not actual things that are profitable like cash. Let me tell you how great cash is. Have you ever had financial freedom? Have you ever had so much cash in the bank that you don't have to do the things that you're forced to do? You don't have to take the job that you're forced to take because you want to survive? Oh, I don't have to do that job. I have enough cash in the bank to survive. You see, GameStop doesn't have to take those certain executives and partnerships on the board. They have enough cash in the bank to survive. And GameStop's board of directors, Jim Groupie, Alan Adel, Ryan Cohen, Larry Chang, and then you also have Nat Turner and Zoo, right? So if I have 6 people on the board of directors and they all want the best for GameStop, I'm going to ask you right now, in corporate America, all you guys out there, tell me how many shares the company you invest in pays their executives. I'm talking about the board of directors. Dollars or shares? How much do they pay them? Probably a significant amount to make decisions on your behalf. Fiduciary duty. GameStop pays their executives $0, not $1. GameStop awards stock options, rewards, to their executive, to the actual board of directors, $0. There's no wasted money here. This is a true movement of the people. This investment and the partnerships that they have currently, whether it be the new retro idea, retro GameStops. You guys don't know about this? Like, they actually have GameStops that are selling retro games. I have Wii games. I have Super Nintendo games. I've got a Super Nintendo back here. I've got it all. I got PlayStation 3, 4s, and 5s. I got everything, right? I would want to go in there and invest. But they've tried this before and it failed. But they're doing it the right way now. They're doing it correctly because omni-channel marketing and omni-channel sales. Retail, it actually works. The footprint's right this time. It's still falling. It's still closing stores. GameStop's still doing the things that it needs to become nimble and profitable. But it's all with the right idea because they still opened 45 new GameStops last year domestically in the U.S. People should know this. They closed down most of their operations in Europe. Well, a lot of them in certain parts of Europe because of the conversion rate, because it might be difficulty getting product, and maybe the value and the profits are not there. Better business is coming. But they have the right people in place. My point is, the book is amazing on this company. It's not just a dollar amount when I say book value. I'm talking about the story. The story that is Larry Cheng. The story that is Ryan Cohen. Yeah, and I know you guys see Ryan Cohen in pictures with billionaires from Qatar, and he's in a picture with Donald Trump, and he's in a picture with Carl Icahn. Whoever he may be in pictures with is one thing. You know what he is in? He's in business with you. He's in business with you, the GameStop investor. It's the greatest connection you've ever had. Might be the only investment you've ever done. But I make these videos so that you guys understand just what you hold and why you hold it. And the elephant in the room, right? We're not talking about short sellers. We're not talking about naked selling. We're not talking about manipulation of markets. None of that. The elephant in the room. Roaring Kitty. Keith Gill. Keith Gill holds almost $500 million of GameStop shares. The man invested his money. He understood what's happening. And he's a genius. You're not alone, millionaires. You're not. But for every YouTube account, every Twitter account, every Reddit account, everyone in comments and videos that want to push you away, everyone in mass media that wants to tell you you're invested in the wrong company, remember the story. GameStop's going to show thousands of % of increase of profit from year to year. They're going to show thousands of % of increase for actual shareholder equity, or hundreds in this case. And when those numbers hit the scene and they hit the street, it's going to be undeniable. It already is. GameStop. Can't stop, won't stop. GameStop. I'm going to see you around, millionaires. Literally. Peace.